Hey guys, what is up? Welcome back to my channel. In our Stock Market Explained series, we have went through a few financial, valuation and profitability ratios. So today we are going to talk about another profitability ratio. In today's video, we are going to cover gross profit margin. So I'll be explaining about the gross profit margin, how to calculate the gross profit margin ratio, and how to use the gross profit margin ratio when you invest and trade. We'll be covering all of that, and even if you are a beginner, and maybe especially if you are a beginner in investing and trading, you want to stick around until the end of the video because I'll be sharing some really valuable and practical tips that you can use and implement immediately in your investing and trading. So you don't want to miss any of that. And for those of you who already have some experience in investing and trading, you can refresh your knowledge and perhaps use some of these tips and tricks that I will be sharing in the video in your own investing and trading. So with all of that, let's get started and dive right into my computer screen. Okay guys, so I'm on my screen right now. So before we take a look at the definition of the gross profit margin, we'll get a better understanding if we first take a look at the definition of gross profit. So gross profit is a metric that investors and traders use to determine the financial strength of companies. We do this by calculating the amount of money left over from sales revenue after deducting the cost of goods sold. So that is how we calculate the gross profit. So now that we have a clearer idea of what a gross profit is, let's take a look at the gross profit margin. So the gross profit margin is the gross profit expressed as a percentage of sales revenue. So the gross profit margin then tells investors and traders how good a company is at selling its products or services compared to its competitors. So the gross profit margin formula is derived from taking the gross profit divided by the sales revenue multiplied by 100%. So the higher the gross profit margin, the better the company is at selling its products and services compared to its competitors. So as investors and traders, we want to see companies with high gross profit margins. Why does some companies have higher gross profit margin compared to other companies? One reason may be that the companies that have a higher gross profit margin have automated their business processes, which means that they have lower labor costs than their competitors. So since labor cost is one component of cost of goods sold, the higher the labor cost, the higher the cost of goods sold and the lower the gross profit and gross profit margin the company has. So as investors and traders, we want the companies that we are analyzing to have high gross profit margin. So the higher the gross profit margin of companies, the more efficient the company is at managing its direct cost of producing its products and services, and the greater the company's ability to retain its profits from its sales revenue. Okay, so that's the theory part. What I want you guys to also be able to take away from this video is practical tips and tricks that you can actually use for your investing and trading. So with that, let's go take a look at some real life examples and how we can use this when we invest and trade. Okay, so to find the gross profit margin of a company, we first need to find the gross profit and the sales revenue of a company. So to do that, we need to take a look at the financial statements of companies. So now I'm on Reuters. Let's take a look at Google. Okay, and then we click on Google. Okay, so where do we find our financial statement? We find it under the Financials tab. Okay, so we can find the sales revenue of a company and the gross profit of the company by looking at the company's income statement. So now we are at the company's income statement, Google's income statement. So let's take a look for this year. So we can see that the sales revenue of Google is 136,819. And then the cost of revenue or the cost of goods sold is 59,549. And then we have the gross profit here. So the gross profit of Google is 77,270. So that's the gross profit. So remember, how do we calculate the gross profit margin of a company? We first take the gross profit divided by the sales revenue. So let's go calculate Google's gross profit margin. So its gross profit is 77,270. So I'm on the calculator. So it's 77,270 divided by the sales revenue. So sales revenue is 136,819. So 136,819. So we take this number, multiply by 100. So we can see that Google's gross profit margin is 56.5% for the year. So now that we have Google's gross profit margin, which is 56.5%, what do we need to do next? Remember, when we are calculating the financial ratios of companies, we always want to compare the financial ratios of a company against its competitors in the same sector and preferably in the same industry too. So how do we do that? So to do that, we have to go on Finviz. So Finviz is also another financial website. So we take a look for Google. So this is Google's financial data. So as we can see, Google's gross profit margin is 55.6%, and what we calculated was 56.5%. So there's a slight difference, and again, there are a few reasons why there might be a difference. But the first reason that I can see is because, as you can see from the Finviz website, the gross profit margin in this case is for the trailing 12 months. So trailing 12 months means Google's performance for the past 12 months. But for Reuters, on the other hand, you can see the data that we calculated using was based on Google's financial period between the years 2017 to 2018, while Finviz used the performance of Google for the past 12 months. So that's why there's a slight difference. So since we are using Finviz to do our calculation, we'll just use Finviz gross profit margin in this case. But note that the difference is because Finviz is using the trailing 12 months and Reuters, what we calculated just now, was using Google's performance between the years 2017 and 2018. So currently we are on 2019. So that's why there's a difference in terms of our calculation. But if you stick to the formula, you will get the correct gross profit margin. So let's take a look and see how we can use the gross profit margin of companies. Okay, so now that we have the gross profit margin of Google, which is 55.6%, what do we want to do next? So remember, we always learn that once we got the financial ratio of a company, we want to compare the financial ratio of that company against its competitors in the same sector and ideally in the same industry. So how do we do that? So okay, what I'm going to show you guys right now is a very valuable tip that you can use for your investing and trading. I believe no one else on YouTube has shared or will share this trick with you, and I'm going to do that right now. So pay close attention to what I'm going to share with you, because this I believe will help your investing and trading and take it to the next level. So pay attention. So how do we compare Google's financial ratio against its competitors in the same sector and industry? So what we do is we go on Finviz, which is also which is the website that we used just now. We go on Screener. Okay, so this is a screener. So a screener helps you filter out the stocks that you want to take to study and analyze for. So what we'll do is we take a look at the fundamental. So as you can see, the gross margin is over here. So what is Google's gross margin? It's 55.6%. So what we want to do is we look for over 50%. We click over 50%, and we want it to be in the same sector and industry. So how do we do that? We go to the descriptive. So Google is in the technology sector. So we click on technology sector, and it's in the internet information provider industry. So what we do is we go to industry, we click internet information provider, right? So you can see internet information provider. So what this do is that the Finviz website will help you screen and filter out the stocks that meet this criteria. So what are the three criteria? It must be in the technology sector. The second one, it must be in the internet information provider industry. And the third one is the gross profit margin of the company must be greater than 50%. So let's take a look at some of the examples. So we have a few companies here which are in the same sector and industry as Google. So let's take a look at the first one. Akamai Technology. I hope I'm pronouncing that right. So you can see Akamai Technology, the company, has gross profit margin of 65.6%. So that is higher than Google. So this is one way we can use to compare the financial ratios of companies with its competitors in the same sector and industry. So I hope you guys have learned a lot from this video, because what I shared with you guys is a really very powerful tool that you can use in your own investing and trading. That is it. I hope you guys liked this video, found it helpful, and have learned more about gross profit margin and how to use it. If you like this video, make sure you give us a thumbs up and subscribe to my channel down below. I'll see you guys back on the channel soon. To your financial success.